Welcome to the Startup Grind.
I'm really excited for this event. I'm glad that so many of you are here. And when I initially approached Dan about speaking, his response was, yeah, if you want a bunch of leftover pizza and nobody to show up, I'll be happy to do it. So thank you for disappointing Dan by showing up. And it's going to be a great event. And this is part of Buffalo Young Professionals Week. Liz Callahan, BN360, you do a great job protecting a very valuable Buffalo resource, and that is the young professionals, who I see a lot of in the crowd today. And even if you're not a young professional, you're still valuable. That might have came out wrong. And before we start, I wanted to let you know about a survey that I made up for this event that says adults check their social media about every 15 minutes. So at an hour-long event, that means you have 4 chances to get on Facebook, like Startup Grind, like Twitter, tweet at Startup Grind, tweet at BN360. Make sure you hashtag a picture of the event, BN360, and you have a chance to win round-trip airline tickets courtesy of Southwest and Buffalo Niagara Partnership 360. So that's freaking sweet. We're also on MySpace if anybody's still on there. So, friends or no friends. Some other quick announcements. UBC BLS, they have a great event coming up on the 19th, I believe. They're starting some great speaker series as well. Friday at DIG is a lunch pitch power. I think I messed up the name, but basically you come in on Friday, 12 to 1. You can pitch any business idea that you have, and there's going to be an aspect of judging it and I think some kind of winner. Another great way to get those ideas that you have out of your head, get them in front of people, and see what happens. It's Chris Way, the Atinga Project. They're launching their Kickstarter on Friday. I think he's here. So Atinga, it's Chris, social entrepreneur. They do really great work helping artisans in Rwanda. Their Kickstarter is going live on Friday, so I would recommend checking it out. It's a great cause, great entrepreneur, and it's a really cool product.
Everybody's welcome. 6:30.
Oh, they're having an event here at 6:30. Is that on Facebook, Chris?
It is. You can walk away with a pair of shoes. We got 200, some available.
Pull me down for 2.
Gotcha.
Sponsors. Every event I say thank you to the sponsors, and I guess I don't really know what else to say, but seriously, thank you. I wanted to get as many people here as possible, and I couldn't do that without sponsors. So we're going to give the sponsors a chance to let you guys know what they do. And Matthew, do you want to come up? Culligan Law, Matthew Palkey, the beer. He knows how to win over the audience.
That's the guy we like.
Thanks, Evan. This really isn't about us. We're just really here to support the community, support Startup Grind. Thank you guys so much for coming. Enjoy the beer, and come next month.
Awesome. Dave, Algonquin Studios, longtime supporter.
Thank you, Evan. Thank you, gang from Startup Grind. We're always honored to be here with you every time we do this together. I just want to let everybody know again that we're launching a business incubator in January called VCamp, and that we are looking for mentors, sponsors, investors, and frankly, campers to come and launch their businesses with us. And I think that's where I should segue back to Evan.
Come talk to me if you have questions.
Thanks, Dave. Dig, got to give a shout out again to Jess. The space is awesome. Pat Whalen, who I think is still here. If you're unfamiliar with Dig, it's a co-working spot in its simplest form, but it's really much more than that. I highly recommend come down, check it out. I see a lot of co-workers here. Wayne's here. Free for the first day. It's really worth it. Uvani, who they don't have a speaker here, but Uvani is the Upstate Venture Association of New York. Dan was the president in 2002. Uvani's goal is to connect venture capitalists, entrepreneurs in upstate New York, raise awareness of what's going on. They have events probably two or three times a year in Buffalo. Again, I highly recommend you check them out. They also have events across upstate New York. They're a great organization and honestly a way to meet potential investors in your business. The Business Council of New York. Oh, well, before I do that, DeVecchio and Stadler, they're a intellectual property law firm. They're out of this building. The third Tuesday of the month, they have what's called the Pirate Fight Club. So if you have a question about intellectual property, trademarks, copyrights, or you want to learn how to steal other people's pens and make money off of them, you should check it out. I went there today, and it was really cool. It's just a good way to talk about intellectual property and something that you should be paying attention to as an entrepreneur. Business Council of New York, they sponsored the event. They couldn't have a representative here, but they sent a short video kind of explaining what they do. So we're going to play that now. Because myself included, I was kind of curious, and I wasn't quite sure what they did, but I saw there was a Lil Wayne video in the coming up here, so yeah, I know Peter's watching at home. So again, Business Council of New York, an important resource. Check them out online. If you have specific questions, come up to me. I can put you in touch with Howard Becker, who is my contact there. But okay, now we're going to move into kind of the entrepreneur short pitches, and we're going to do one little bit longer one. But again, this is a chance for people in Buffalo, entrepreneurs, to just get in front of an audience, do your elevator pitch, and I think that's very valuable as an inspiring entrepreneur. So we're going to, Paul, you want to be the first? Paul is going to talk about the Unstuck workshop that he has coming up.
Not that, actually. It's the brunch. Okay, sorry. This is more of an event pitch, so I'm not actually here to pitch you or sell you anything, but you might want to mark the date down for October 4th, which, yes, it is a Saturday. It's the third in our series of Buffalo Breakthrough Brunches. And these brunches are networking opportunities and they're learning opportunities. And yes, they happen on Saturdays from 11 to 1. Yes, there will be alcohol and fun available, but it's really about ideas. And not just new ideas, but how to put those into practice in a real setting, in a real business model. So this next one will be right here at DIG. Again, October 4th, the theme is A Rising Tide Raises All Ships. And we will have Patrick Finan of Block Club, who will be coming out to not only talk about Block Club and their triple bottom line model, but also do an exercise so we can start to create actual visions for how to put our impact into an actual business model. And then also will be Dan Giganti, local hero amongst these crowds, and he's here somewhere. I don't know where the hell he is. He hides really easily. There he is, yes. Excellent. And he'll be talking about you and who and their model and how to have an impact in your community built right into your business. So if you're into some new ideas, something fun, come out, meet some new people, have some drinks, and learn how to apply those things in a real business, then October 4th from 11 to 1, and you can go to breakthroughbrunch.com. Oh, DIG members, it's $10. For everyone else, it's $20.
Thanks, Paul. I have attended those events. Say the word. Jenny, you're next.
Thanks, Evan. Well, I design eco-friendly women's business and business casual clothes, and what I'm planning to do is to have all stages of manufacturing here. So everything from the raw materials, which would be sourced within 300 miles of here for most of them, all the way to closet-ready clothes would be handled right here in Buffalo. I have been designing clothes since I was little. So the first time I did this, I was 8 years old. I designed a special occasion dress. But I'm into business and business casual now, and I'm looking to start this in a way that it would create 150 new jobs and be a lasting opportunity for Buffalo.
Thanks, Jenny. All right, Jeff. I think originally we were going to sit down, but I think we might want to, we'll just stand up, if that's cool.
Sure.
So Jeff is the founder of Sale Diem. So what is Sale Diem, Jeff?
Sale Diem is private sales for women's contemporary fashion. Every day we feature up to 100 of the latest styles and trends that women can normally find in the most prestigious boutiques throughout the country.
I think fashion, I think New York City, I think San Francisco, I don't think Buffalo. I mean, I'm very fashionable, obviously, but why Buffalo? Why did you choose to found your business here?
You're probably also wondering why some dude is the CEO of a women's fashion company too, right? I get this a lot. Just a long story short, I was living in Charlotte, North Carolina at the time before I was inspired to come back and headquarter at Z80. And a very good friend of mine called me into her, and who is now my co-founder, called me into her women's clothing boutique. And she knew my business background. She just wanted me to come in and take a look at her operations just to see where we could make money, save money, etc. And I saw how this little 1,200 square foot store in Charlotte, North Carolina just made a ton of money selling clothes, and zero came from the internet. So after digging and digging, I saw that women spent $25 billion in boutiques in 2013, and 90% of them had no active web presence. So for me, it was recognizing the opportunity that we can bring this to scale, these products to scale. Now, as far as coming back to Buffalo, I was being recruited to go to Atlanta, to Tampa, to Miami, all of them starting incubators and tech spaces down there. And what I really looked at, I was born and raised here and moved out, but what I really looked at was Buffalo has traction. You can start a business and get funded. There's $1 million fundings at Z80 and other places. You can start a business and go public, right? Synacor has done that. You can't start a business and get acquired for $100,000+. Liazon did that. So when you have all those factors that Buffalo, you can do these things in Buffalo. That was all the inspiring, and places like this where people can get together and share, like-minded people can get together and share ideas. So that was really the point for me, that you can do this stuff in Buffalo, and it's already been proven.
Cool. Thanks, Jeff.
Thank you.
Perfect segue, Jeff. You mentioned a couple of the things that we're going to talk about with Dan Penberthy. So we're going to move into the startup grind section of the event. So me and Dan, I mentioned when we first brought it up, he was very nervous nobody was going to show up. We had a trip out to, actually it was a Uvanni event in Syracuse last week, and when I mentioned to him that I wanted to go, he said he wanted to go as well. So we said, let's just carpool. And I agreed, and then I was kind of thinking this could be an awesome experience or this could be terrible. When we're in the car with him for 2.5 hours, what if I'm awkward? What if he's awkward? But it was great, and it gave me a lot of questions, and you're going to hear them. So Dan's background real quick. Dan Penberthy is co-investment manager of Rand Capital, which is a Buffalo-based venture capital firm. Rand has made over 116 financial transactions since 2002 and has had numerous portfolio companies have successful exits. Dan also served as the president of the Upstate Venture Association of 2012. So let's make some noise. Let's start this event off right.
And Evan is the perfect co-pilot because I got to drive, pay all the gas, I think I paid for your admission, and I bought you all the beer. So I am accepting applications for the next Uvanni meeting, which is being held at Marist College and will include golf also.
I'm there.
Golf in October, though.
I'm still there. All right, Dan. thank you for coming. Let's start at the beginning. Rand Capital, maybe go over the background of Rand, how you got to Rand.
Sure, Rand's been around Buffalo for a very long time, probably even longer than kind of some of the old guys in the room, like myself. So it was founded in 1969 and went public in 1971. Extremely unusual to have a small public company, certainly in Buffalo, much less in the venture capital industry. So I came in, the founder retired in 1995, 96 timeframe. There was a new CEO came in, and I came in 97 to help run the fund. Initially as the controller, there were two other investment principals there. We were starting to run out of money in 2001, and one of the other people decided to leave. And so I took that chance to kind of to step up and become more involved in the deal side. We got lucky on a couple deals, got lucky on a couple more, and continued to grow the fund over that period of time. A couple things I wanted to kind of highlight in terms of kind of, I think, how I got to Rand initially was kind of the same route that I think a lot of you folks will need to take on whatever venture that you're trying to do. It's all about the network, right? And that's kind of the value of this 1 minute pitch that you first got into. Anytime in Buffalo you're going to try to do something, or for that matter even outside the region, the value of your network is critical. Whether it be your school network, your professional network, your social network, your sports and leisure network, it truly is invaluable. I got to, at Rand, coming out of public accounting, then I went to, met the CEO through actually my wife's employer. And so he knew me from that background. Board of directors of the company knew me from my other board of directors. So I did achieve kind of where I got to Rand through more of a networking opportunity, which I think kind of the short story and kind of how I encourage all you to do whatever you do. Don't underestimate the power of every networking ability and event you can attend.
I definitely agree. Numerous times, you think it's a random connection that's going to have no value, and it ends up being very, very beneficial. So Rand is a venture capital firm. Quite simply, you invest in companies. What does that exactly mean? What companies are you investing in? What does Rand look to invest in a company for?
Well, we go into every investment with kind of a fundamental investment thesis is the most you can lose is the cash you invested, right? And the upside is unlimited. So certainly that's the fundamental thesis going in. But we look for all stages of kind of companies and all stages of industry. We're in Buffalo, New York. So if you were to just the people that talked prior to kind of made the 1 minute pitches, you start to see a varied interest in a diverse sector of kind of companies in Buffalo, New York, and upstate New York. And that is a cross-section of the Rand portfolio. Since we started a separate fund called Rand SBIC, which fundamentally gets money from the SBA. We started that in 2002. And I'm just working on some of the data for that fund now. But since 2002, we've invested $43 million into 42 different companies. And that probably represents almost 40 different industries, to be honest with you. It's incredibly diverse, from true startup software companies like Synacor, Liazon, you had mentioned, old line manufacturing companies, companies with no revenues, companies with 50 million in revenues. So it truly is a broad section across the Rand portfolio. And if you just did the math in your head, 43 million, 42 companies, looks like it's $1 million a deal, right? Well, that's kind of what it is. Some of these smaller companies, you step in with a couple $100,000 investment to dip your toe in the water. We did that with the Crowdbouncer. We started that with Empire Genomics. So you start little with kind of some of these other deals, and you know what happens after you make your first investment? They're going to need more money. And so then that allows us to be at the table and kind of listen to the story and invest more capital down the road. But fundamentally, 42 companies, 43 million bucks, $1 million a deal. Some deals we got 500 in, some deals we got 2 million in. But it's a broad spectrum across diverse industries.
Speaking about diverse industries, I recently had a conversation, and it was somebody from outside of Buffalo, and they're asking, what is Buffalo known for? Is it a specific industry? And I kind of had to think, like, no, we have a lot of different things here. Do you think that that's a problem for Buffalo, or do you think that that's actually beneficial, that we can have different businesses come out of Buffalo?
I think it's challenging having a diverse cross-sector of investments for a young company, because when you go outside your region, which you may need to do to raise that next round of capital, they don't perceive Buffalo as kind of a hotbed for that sector. And so you may need to kind of oversell them on the opportunity, not that an entrepreneur would ever oversell, of course. But it will make it more difficult just because of kind of the Buffalo's past. What it does bring to Buffalo brings to the table, though, is obviously the work ethic, the cost of operating a business. You can do things here on a tighter budget than you could otherwise do in other cities. We do have companies outside New York State, particularly over in the Boston area. Salaries are a lot higher. People are a lot tougher to get. People are jumping from company to company for higher salaries. So I think when you peel back the layers and you say, well, what can Buffalo bring to the table? It's the ability to do this on a tight budget and get the company to a meaningful size where then you can look respectful when you step outside your region to go raise capital from other investors.
What does a typical day in the life of venture capitalist look like in Buffalo? Now, you mentioned that you have these different companies that you invest in. How do they get in front of you, or are you searching for them? Are they coming to you? How does that work?
It's the best job in the world. There's no doubt about it. But it is, we have currently 26 companies actually in the portfolio right now. So we have a big family, right? We have 26 children in the portfolio. And believe it or not, some of those children are very good, and some of them demand a lot of work, and some of them need to be slapped around once in a while. So kind of the ebb and flow of kind of our job at RAND is to kind of work with the companies kind of as they need it at specific points in time. And that is self-evident as kind of you're starting to work with the companies, and it's easier to work with them and less demanding in theory as you have a more mature investment and you're in there a longer period of time, because they know what to expect from investors and how they should react.
Peter, I think your computer's being hacked.
The hackathon is next door, by the way. So we're always dealing with kind of various companies at various stages of development at RAND. 25 different kids, and as you can imagine, they're all different. The rest of the day is the fun part. It's listening to entrepreneurs. What could be better in a dreary winter day than having an entrepreneur come in and tell you how bright the sun is shining, right? I mean, that's what they do. They're energetic, they're passionate, they have a lot of energy, and that truly is kind of the best part of the job, is listening to these entrepreneurs. We will receive unsolicited applications, business plans from hundreds of people a year. Those are dismissed. Those will not get a serious look. If you want to get a serious look at your plan, you need to call Matt over at Colligan Law, and Matt's going to give me a call and say, this is one you should look at. That's how you're going to get the door opened. And then we will take a look at that. And so that quickly whittles down that hundreds or even thousands of emails that are quickly deleted down to a couple hundred where somebody says, open the door. From there, we whittle it down. You say maybe 100, you start flipping through the paperwork or the email to try to understand the business a little more. You quickly whittle that down, make a few phone calls, see how long the deal's been around, what else we know about the industry, how much capital they're going to need. And we whittle that down where we actually sit down with probably a couple entrepreneurs a month, face-to-face, or go out and visit their operations and learn more. And then ultimately we fund 4 to 6 transactions a year. So it's an incredibly small minority of businesses that truly get funded, which is the point which you shouldn't be discouraged at that. The key kind of takeaway here is that we have done the 43 companies, we have done 130-ish transactions. So typically we'll invest 3 times in every one company. And I will tell you, it usually takes 2 to 3 visits before you get my first investment. So often an entrepreneur will come in the door, tell their story, and I'll say, this is with Liazon. That's interesting, but I don't know. This is a new market segment. I don't know what's going to happen. I said, why don't you keep in touch? 6 months later, 3 months later, they send an update. They go, Jan, you were right, you were wrong. Here's what I learned. Here's who I hired, key staff, key changes in the market. We say, that's interesting. We may or may not write a check. Why don't you keep us up to date? And they do it again, another 3 or 6 months later. And it's repeatedly proven that, kind of that ongoing communication, that relationship that we've now established, clearly makes it easier to write the check on that second or third visit, without a doubt. It's very rare to kind of walk in the door and walk away with a check. Unless you're an exceptional entrepreneur, you have an exceptional opportunity, or you have an exceptional line of investors already lined up, and you're just looking for me to make a matching investment.
So 43 North, they had an article the other day talking about venture capital. I think it was Interpol Quebec, the head guy over there. He said that less than 1% of startups ever receive venture capital. It's very discouraging as an entrepreneur. Should entrepreneurs consider other ways? Should they count on venture capital? I guess if I'm an entrepreneur, I'm starting out, what should my mindset be? Should it be go after venture capital, or just do a kick-ass job of running my business and the venture capital will come?
An entrepreneur will never be discouraged by a lack of capital, right? If you are discouraged, then I would argue you're not an entrepreneur, right? Because an entrepreneur will beg, borrow, and steal, not always in that order, to get their idea to fruition, right? So I don't think as an entrepreneur, just kind of the inability to get to the capital ever stops them from trying to complete their vision and get out to market. What you can do, though, is what other successful entrepreneurs have done, is you got to go out and you got to find, your beta customers. You got to find, somebody who will, raise the flag for you, to take over M&T as motto. But somebody who will promote your product within their organization, someone who will demo it, someone may give you development money. Don't underestimate Marty Levine, launched in New York, SBIRs from Jack McGowan, STTRs, and all these other things that I don't really know what they are. But it's, it's NSF funding, it's vendor funding, it's strategic investor funding, it's begging, it's borrowing, it's doing everything you can to try to get that product out in the marketplace. Because we're not really that bright as a venture capitalist. I don't really get it all the time. But if I can see one customer that has used the product, that has bought the product, that is demoing the product, I can ask that one person hundreds of questions, and those 100 questions will be a lot more valid answers than what the entrepreneur will tell me, because I'm looking at it from the view of the consumer. Why did you buy it? Who else did you look at it? What would you pay for it? Who had the buying decision? Who had the paying decision? What feature set did you like? It's just endless marketing questions. If any of you have ever gone through Arun Jain's class at the University of Buffalo, everything he says about marketing is dead on true. You got to understand the view of the consumer and how they'll react and buy it in the marketplace.
What's more important, a great idea or a great team?
It has to be the team. There's no doubt about it. It is the person that we will invest in, more so. The idea obviously is important, but it is the person. And even better to have a couple people with you, even kind of an old gray hair like me somewhere in the board or the management team, to just lend fidelity and validate and give you business experience. It is the team without a doubt. Idea is critical, but you got to have the team behind it, because your business will change. You don't know it right now, but when you go out there to the market, you're going to suddenly realize. I think it was Mike Tyson that said, and I'll get this wrong, but it's Everybody has a great plan until you get punched in the face, right? And think about it. I mean, it's true, right? So here's the entrepreneur going out in the market. Hey, I got my product. This is great, and boom, everything's changed. The market doesn't want it. The market don't want to pay for it. You need to change your business. There goes the business plan. And that's when the entrepreneurial spirit kicks in, and having the management team around you to help get you to market is incredibly important.
So a couple months ago, Fred Wilson, who's a big VC out in New York City, was in Buffalo doing a talk at Larkin Square, and he mentioned that it's important to kind of trust your gut, and that he missed on Airbnb, investing in Airbnb, because he didn't see people paying for it, and obviously Airbnb's a billion-dollar company now. What is the role of intuition or your gut in the role of a venture capitalist? Or have you ever missed a deal because your gut was saying no, or the customer was saying yes, or maybe vice versa? Customers were saying no, your gut said yes?
Certainly your intuition is important, but probably just like kind of anything you do, it's a relationship. So at that really the first meeting of the person coming in or us visiting their company, we got a sense whether we can work with this person. And that is really what drives our investment decision more than everything. Do we like this individual? Will this individual respond and react to our input, both good and bad? How do we think they will do kind of in working with us? Our average hold time at investment is probably 7 to 10 years. So that's a long time, right? They're kids. So we're going to get them when they're this big, and when they leave us, they're going to be yay big. And because of that, we're in a 7 to 10 year relationship, and we need to make sure we can work with the people. So that is the most critical thing, and that is, I think, your gut feel, your intuition for kind of how you can work with the individual. And yeah, we do miss deals. We do deals we shouldn't do. We haven't done deals we should do. Patrick Feynman from City Dining Cards, I love him, and I think he's going to be a terrific entrepreneur. Got caught up in a few details on his deal, and we didn't do it. But I think he'll be a success, and I think he's a guy we could very much work with. And I think he'll run a terrific program here. One of your one-minute pitches talked about that. October 4th. He'll do a great job. He's a guy you can work with.
So this is thanks to Matthew Pelkey, and these are just facts. 2002 to 2013, quarter through 2013, New York City, $4.3 billion invested. Silicon Valley, $19.8 billion invested. And upstate New York at $106 million in 48 deals. I've heard it. People often say there's no money in Buffalo for startups. What would you say to them, or what are your thoughts on this?
There was no money up until a couple of years ago, but then the state put out $25 million into 5 VC funds spread across the state. Now it is spread across the state, but we did get Excel Ventures, Z80, and Cayuga Ventures all got an allotment. So there is some startup money available for early stage ventures. It is still desperately needed. We have our Buffalo Angel Network, which is now operational, funded, and will close a deal. So I think there is some startup money available. It's not a lot. Entrepreneurs will continue to beg, borrow, steal. Again, not always in that order, from your friends, families, and fools in order to get your businesses funded. But you need to do whatever you can to raise the money from whoever you can. There's a lot of doctors right down the street here that love to invest. I would encourage you to hang out in the cafeteria. Doctors have funded a number of transactions in Buffalo, and they're kind of like group investors. Once you get one, you're going to get 2 or 3 more. So that's a good thing, right? Because you can turn 20 grand into 60, 80, 100 grand pretty quick. But there is still a dire need for more capital in upstate New York, which is going to make your job a lot tougher. And the next problem you're going to have, though, is once we get your seed funding in place, it's that next level of funding. It's not getting any easier. Because once you're at $500,000 in revenue, say, and you're looking for that Series A or A1 stage investment, it's really hard. unless you can go out and show a need where you got to raise, $10 million and you can pull somebody in from out of the area. But unfortunately, that's reality, and it's really hard for the next level of funding. But I think that'll get better. I think with the efforts of Launch New York, I think the Angel Fund, hopefully all these funds can start moving upstream and writing bigger checks. Rand will continue to write checks locally, and we go across the spectrum from that startup funding to later stage companies. And with the efforts of all the folks at Z80, all the folks that have been at startup grant presenters here in the past, I think those relationships can help bring check writers to Buffalo. I think that's how we're going to kind of save this thing and keep it going.
This kind of came from the event with Mitchell Patterson, and he spoke about the need for more wins in Buffalo, more successful companies to exist. So you've worked with a couple of very successful companies. Typically what keeps coming to my mind is Synacor and Liazon. So I was wondering, maybe give a little overview of what each one of them does, your involvement with them, how they came to Rand's table, and what lessons could an entrepreneur learn and to replicate that.
I think I mentioned that things are done in Buffalo via relationship. So Synacor was actually a deal, I think, that Pete Grum, my partner at Rand, got at Hutch's, because Jordan Levy was at the next table over and said, hey, I got a deal for you. So hanging out at the bar at Hutch's is always a good place to do your deals. But then we looked at it, it had kind of a group of investors around. It was kind of a turnaround at the time. It was in 2002, after kind of Check.com had blown up. And so we came in and did, I think it was a 10,000 to 1 reverse split or something, and basically restarted the company. And since then, after that, we funded probably 4 or 5 different funding rounds into that company. We initially started as a sub-debt investment. So that means we invested debt into the company and we got warrants in return, even though the company really didn't have all that much revenue, but it was still a sub-debt instrument. And believe it or not, what usually happens with the sub-debt instrument is it usually matures and the company isn't able to repay it. So surprisingly, we end up in equity. So you could argue maybe we should just write our check into equity in the first place, since that's where we're going to be anyways. But that's exactly what happened with Synacor, Check.com at the time, was we invested in debt. They actually went out and raised some more money. They paid us back, and we said, we don't want to get paid back, so we gave it back to them and bought equity, and then we kept buying equity along the way. And ultimately, that was a huge success in terms of revenue growth and employee growth, certainly a disappointment in the public stock market. And I think if you're looking for a way to kind of help Buffalo, is if we can help Synacor, turn around that stock price, I think that's something you can, go tout about in other cities and say, we did it once, we can do it again. So I think that's incredibly important. Liazon is a company that Tim Godzik, the founder, and Ashok Subramanian came to us at least on 2 or 3 different occasions over the course of 2 or 3 years and made pitches to us. They finally came to us, kind of hit us at the right time, hit them at the right time in their growth. They were starting to get a little bit of revenue, a little bit of traction. And so we were able to kind of come to terms on a debt investment with warrants into the company. And you know what happened was, in 3 months, they went out and raised more money and gave us our money back, and we said, I don't really want my money back. So we invested back into the company. And we proceeded to do that on 3 other occasions, participate in future funding rounds of the company. Each time they were getting funding, hopefully there's no one from Liazon in the room, but they were getting funding because they were out of cash, right? And it was taking a little bit longer to get to market, a little bit longer to get customers. The market wasn't accepting their product that they had. The market was changing. They were developing private health insurance exchanges for companies. That was a new market. That was at risk for going away from the federal government. And so we finally got to the point where we'd funded them over a number of years. And Ashok, again, it comes down to the management team, finally realized that his sales model wasn't working. He had a direct sales model, people dialing for dollars, trying to get companies to sign up. And every time he dialed for $1 trying to get a customer signed up, that customer would walk down the street to Lolly Insurance, for example, and Lolly would say, well, you don't need that product. He goes, I can give you something else. And so Liazon never got the sale. So they were struggling desperately with this direct sales model, but the entrepreneurial spirit came through from Ashok. He realized that, accepted it, and was willing to change his business model and willing to convince his board of directors and investors of the new business plan and model to get some additional funding, and he entirely upended his entire business and went to partner with the Lollies of the world and all the insurance companies, because those are the ones that had the relationship with the customer. It wasn't Liazon had the customer, Lolly did. So they partnered with Lolly, and from there kind of the story's all over, and they got a relationship with a strategic investor and quickly sold their company for $270 million or something crazy like that. And we did okay. We got a 7 times return. Everybody gets lucky sometimes. But one more exit, recent exit. QuaDPharma, a little pharmaceutical company, was kind of a startup company, a couple million in revenue. That company was just bought by, I'll call it a super startup. Right, so little startup in Buffalo, QuaDPharma, gets acquired by Kynex down the street here, super startup, that just raised $50 million. That just happened last week. So exits are happening, and I think that will help raise money in the area.
Yeah, anytime that there's positive press in Buffalo, that definitely helps. You kind of mentioned this, but what happens after I get the check from Rand? Can I cash and go to Vegas, or do you install a GPS tracker on me? What is the relationship after I get your money?
Just today I had Jack McGowan and I were on a phone call with a prospective, a company we had looked at over the years, and we finally agreed to make an investment. So we're going through the term sheet, and we ended up talking about that kind of stuff. And I had in the term sheet that I wanted to be, I didn't need a board seat, but I wanted information rights and be able to attend the board meetings and kind of act like a board member, but just not be a board member. Because sometimes we add value, most of the time we don't, but most of the time we're just a pain in the ass. But we have seen enough businesses fail where we can provide specific input, at points and critical points of the company. So I told the guy, I go, because he didn't want to give me the board observation rights. I go, I will have these board observation rights until the day you die, or I get all my money back. And so it kind of ended the discussion. But we were kidding around on the call, but it kind of goes to that, what do I expect of the companies we invest in? I expect good corporate governance in everything you do. That means you're going to have investors. They're all going to be invited around the table because we do provide input. You are going to need to lean on us for relationships and introductions at certain critical points of your business development. It's all about networking, right? The folks around the table have huge networks. You don't know who we know, who we're having dinner with, who the relationships are, and that is what's going to help your business more so than anything. The ability for you to say, I need help to find a software guy, person that can do this in this area, and more likely than not, through us or one of our friends or a friend of a friend, we'll be able to get that for you. So, in terms of what we expect out of a company, what we expect out of an entrepreneur, we expect you to act like a business, right? And good corporate governance is critical, a good board process, and good monthly reporting. The best thing for an investor to do is an entrepreneur to do is over-communicate. That means you send me a weekly report, a monthly report, and a lot of now the portfolio, again, 26 companies in the portfolio, they send us a weekly email that says, here's 2 good things and 2 or 3 bad things that happened this week. And that goes a long way. That makes the entrepreneur, so when he's talking with us, that we understand what's going on, we're familiar with it, and we can react and help. And when we read that, immediately I can say, geez, he's having a problem in this. I know Peter can help in that. And immediately I just send it over to Peter. Peter, what can you do for me? This company needs help. And so again, over communication is critical from the entrepreneurs. As I mentioned, that we have to be able to work with the individual. The person, we feel they need to be, act responsibly and reasonably, and we have a good relationship with. I mean, that's the ultimate deal breaker right there. Rand will not invest in life sciences, drug development kind of stuff, because that's, I'll make up the number, $50 million in 10 years. My checkbook's not big enough for that, so we won't do those types of transactions. But ultimately it's, how much money will you need, and have you explicitly kind of laid out for me kind of when you need the money. It's okay that, you need $2 or $3 million or whatever the number is, but you've kind of laid out a timeline on when you need that. I need this much to reach this milestone. Share me that information. And until we get comfortable on all that input and how you're going to get to market, that's the deal breaker. The most important thing you can do for an investor is tell me how you're going to get that one customer or the second customer. Just convince me on that. If you can convince me you can get to 1 or 2, I'll start buying into that. You can get to 10, 100, 1,000, 100,000 customers. Show me how you're going to get to 10 grand in revenue, 100 grand in revenue. Don't try to tell me that, here's what I need to get, 2% of the marketplace, and that generates, it's a $50 million market, so here's how I can get there. Show me how you're going to get the first couple customers, and then we'll go from there.
You mentioned that Rand will invest in multiple funding rounds, and if you're not familiar with venture capital, you start with A, and then you raise more money, B, C, D, until you exit, and you typically you sell your company or you go public. Do you think that the need to go out and continually raise that money, or that kind of operating procedure, do you think that distracts entrepreneurs from running their business because they're always thinking about where am I going to get my next venture capital check?
You can raise money or you can raise revenues. You can't do both. There's no doubt about it. So it's incredibly difficult for an entrepreneur, because while you have to go raise cash to run your business, you need to go get that customer, and it's incredibly difficult for any entrepreneur to do both things well. We have seen countless entrepreneurs, that have failed miserably at both, meaning unable to raise money and unable to raise revenue, just because they couldn't manage their time efficiently. Raising money is the most difficult time you will ever have as an entrepreneur. The second most difficult time is when you're trying to sell your company and you're trying to maintain revenue while you're trying to work with a strategic investor trying to sell it. Because when you're doing that, you start seeing your revenues and your relationships start to decline from your customer base, because you're spending all the time trying to sell the company. So incredibly difficult for an entrepreneur to raise revenue and generate sales concurrently. And that's why it's helpful if you got kind of a little deeper management team to help you through that process. But it's very difficult, very difficult.
You mentioned the importance of a team, a couple different times. So, if there was a fictional character or a superhero or somebody that you would want to either invest in or have on one of the company's teams that you've invested in, who would that be and why?
Well, we got a CEO down in Cortland that's kind of like Tommy Boy.
Is that a good thing?
He's a guy that'll, what was Tommy Boy? He was Callahan Auto Parts, right? Yeah. So he sells machine tools, right? So he'll hop in his little Hyundai that the company bought for him that now has 280,000 miles on it, and he'll just drive everywhere to talk to customers. He'll drive from Cortland to Cleveland to Detroit to Montreal to Maine, Albany, kind of driving all over, just going around meeting with customers. All these little shops across the Northeast. And then he said, I think I could sell this stuff in Asia. So he somehow squeezed himself into an economy seat on Delta and made his way over to Asia. And he's kicking ass. I mean, he really is. This guy is a real life Tommy boy. I mean, he goes out fishing and he drinks a case of beer himself. And my wife and I went to dinner with him, and he had 100 chicken wings and 100 cigarettes. And so we have invested in kind of a fictitious character, but he's real. And you know what? He kicks ass. You know why? Because he goes out and talks to the customer. You know why a lot of the businesses that I see, especially the early stage ones, begin to struggle is because they're afraid or reluctant to go sit in front of the customer. You got to go sit down next to Isaac, who's over in the IT system at Catholic Health, I just learned, and you got to sit down and say, okay, how can I get this software into your system, your Catholic Health system? What do I need to do? What other software systems you looking at? Talk to the customer. Sit down in front of them. Don't email them. Calling them's good, but you got to be face to face. One of our customers, one of our portfolio companies, just found out they lost a very large customer down in Texas. They were in kind of an advertising space, and our first reaction was, and they got it via email. Our first reaction was get on the plane and get down there. Go sit in front of the person. Figure out, okay, we lost that segment for regulatory reasons, but how can we make it up? What else can we do for you? And you know what you find out when you're sitting next to the person? You can solve some of their problems that they may not even know that they have a problem, or they may not know where to turn. And if you're a savvy entrepreneur, you can turn that negative environment into a positive one, because you all of a sudden can solve all these other issues that you otherwise would have never known, because the person would not have communicated that to you via email or the phone. You sense that through body language, through communication. It's all the casual talk in front of a desk. I mean, so that's really kind of the key. So fictitious character, I think we have invested in Tommy Boy. He's a real guy, and he's CEO of the year in my mind. But kind of the other one that would come to mind is Willy Wonka, how about? So think about Willy Wonka, right? He's a visionary, right? He's a marketing genius, giving out the golden tickets or whatever, right? So to generate sales. He's got all these crazy inventions. He's a little bit quirky, a little bit eccentric, kind of got all these great products. What was one? The everlasting gobstopper or something? And the gum that turned violet blue or purple or whatever she was. But there's one quote or one comment that in that movie that he says that really ties to entrepreneurs and inventions. And it goes something to the effect that, and do the math, okay? Because inventions, and he doesn't say entrepreneurs, but inventions are 93% perspiration, 6% electricity or energy of the entrepreneur, 4% evaporation, because no matter what you do, it's not going to work, you're going to have to do it again, and 2% butterscotch ripple. So, you're supposed to say, what does that add up to?
More than 100.
That's 105%. And it's exactly what an entrepreneur needs to do. They need to put 105% into whatever they do in order to be a success. And the Willy Wonka butterscotch ripple, that's what you're bringing to the business, right? That's your uniqueness. That's kind of that's what differentiates it from everybody else in the market. What's your butterscotch ripple? That's your differentiating factor. And that's the differentiation that's going to get you the capital. It's going to get you the customers. It's going to differentiate you in the marketplace. That's really what's going to make it a win. So you got to think to yourself, okay, what's my butterscotch ripple? And you always got to give 105%.
I also think Willy Wonka had a excellent team behind him with the Oompa Loompas. So, again, the importance of hiring quality people from the start.
That's right.
But no, butterscotch ripple. I like it. Let's move to Buffalo questions a little bit more specifically. You were the president of Uvanny. Uvanny covers all of upstate New York. And I've heard this.
We didn't have a video though.
Nah. Thank you. And I've heard this multiple times that upstate New York, it's siloed, it's connected, but there's silos. So do you think that is a real problem between specifically Buffalo, Rochester, and Syracuse? And how could we work around that?
I think in any upstate environment, you are going to have kind of that silo mentality. But I think we're working out through Launch New York is trying to break down kind of the barriers between county borders. And I think that's a tremendous success. I think the effort of the angel groups specifically will help that because we have Buffalo Angels now actively involved in the Rochester Angel Network. And then we also have now the new Syracuse Fund, Armory Square Ventures. Mitch Patterson was here a couple times ago. So I think all that will help to break down all those barriers that people would feel like they couldn't invest in Buffalo if they were in Rochester or Syracuse. So I think it is getting a lot better. And I think, again, it's a network and a relationship, and we need to start seeing successes across the communities, and the cash will come.
I agree. The last question I have for you, and it's what I've asked every Startup Grind guest, is simply, if Buffalo is to succeed, it needs more of blank.
I think it needs a couple more successes. I think we just had one today that Dan Magniszewski sent around, microlanguage company. I'll say microlanguage because I looked at a microlanguage company a bunch of years ago. Natural language processing kind of company out of UB. I think that's tremendous. I'd heard somebody say it once, kind of what we need is one professor to show up on campus in a Ferrari and everyone else can say, how can I do that too, right? They can point to it and say, that's what I want. And they start to realize that, you need to reach outside academia and take your technology outside the classroom or the lab, which are right down the street here, and get a business partner and a management team. So I think a couple successes, and I think we have those. We have Liazon, which is a proven success. We have our QuaDPharma, which was a success. We have Synacor, which was an early success. It turns its stock around, and I think that'll help out a lot to prove that it's a success. You got this one just out of UB today. So I think those are kind of the keys. And then I think relationships. I think we really need to start, reaching out to all our contacts and find those people that have migrated outside the area and say, we need your help, for these specific companies. And I think that's the responsibility of all the universities certainly in the area. I think it's the responsibility of everyone in the room. It's my responsibility to reach out into my networks and say, how can I help these specific companies, whether I have an investment in them or not? And I think that's probably kind of one of the things that we try to do is, we'll sit down with almost anyone locally that wants to sit down for a cup of coffee and share their story. You probably won't get a check to start, but we'll start a relationship. Just like this program, I'll give you free advice and you get what you pay for. But you are always more than welcome to come down to the RAND building, and it's going to take a while to get these meetings set up because I got 25 companies I got to take care of. But that's a responsibility I think that all the angel investors have and certainly institutional investors have to help break down the barriers and the relationships to help all your companies succeed.
Awesome. That's all the questions I have for you. We're going to open it to questions from the audience now. Tom, I'll let you run the show. I'll kind of turn off the mic so you ask.
Sure.
How much of your investment, whether it be percentage or number of companies, have social responsibility as a primary mission?
There is companies in our portfolio that have a social responsibility would probably be only one or two. And those companies are struggling. They have a great product, a great service, but the market doesn't want to pay for it. All right? So, Is it a business if you don't have any customers? Well, they got some customers, and then they argue, well, you know, it's a Facebook model, you got to get all the eyeballs, all the users signed up, and then that creates value. But in the end, you got to have something that somebody's willing to pay for. And specifically the company's GiveGab down in Ithaca that tries to match up volunteers with volunteer organizations. Terrific cause, no doubt about it. But extremely difficult to sell that into companies. You think it would be a natural, but people don't want to pay for it.
Follow-up to that, your thoughts on social enterprise and B Corps, benefit corps?
I have no idea what it is.
Okay. That benefit corp is essentially the primary mission is social, but then there's profitable responsibilities as an organization. So
I think a lot of funding in that area, you're going to need to find someone else passionate about that similar industry, passionate about that cause, I think is the key for getting funding in any of those segments. You know, I am, even though most of the time I'm not for profit in my company, we are a for-profit business, believe it or not, you know, despite what Dave Robinson will say in the news sometimes. But we are a for-profit business, and until we can validate that somebody in the marketplace will pay for kind of these products or services, that's probably the time when we start investing. But you always need to find that one passionate investor that believes in what you do. And how do you get that? Well, you gotta go tell your story to 10 million different people in 10 million different days until you find the one. It's a needle in a haystack, but they're out there. You know, people are writing checks. You know, it's amazing how many times I look at a cap table. That reminds me of something. How many times I look at a cap table and there's 50 different names on there. People are writing checks. You got to go ask for it. You got to go find that person, right? And I'll tell you, the first thing when you walk in my office, probably before probably right after you make your pitch, I'm going to say, give me your cap table. A cap table is a list of your ownership and the shares you sold. Because if you don't have that cap table all laid out for me, you don't have good corporate governance, and it's just a mess. Because a lot of times what happens is you raised, $500 from Aunt Susie, and you told her, well, she can have 4 times her money back whenever she wants. And, I'm sorry, I can't let Aunt Susie have 4 times her money back. Another question? Doctor? You're not one of the doctors from down here I was making fun of. Okay.
Have you ever experienced a funding event where it was bad for the company, either timing or the money has caused them to not work as much towards it? So was it bad for that company?
Yes, we have made bad investments. By the way, a third of our investments will go bad. So we do lose money quite regularly. There's probably only one time in recent history where we put our money into the company and we lost it prior to the first board meeting, which really sucks. But that was more of a legal issue that, the company we were acquiring, they didn't have a right title to the assets, and unfortunately it was in Canada. And if you sue in Canada and you don't win, you're responsible for both sides of the legal fees, is what we were told. I don't know if that's true, Matt, but that's what they told us. So we didn't litigate because it wasn't worth, there was a lot more at risk than our investment. So other than that, I don't think we've ran into the experience where people have stopped working once they got the money. I don't think, you can vet your entrepreneur enough, and I'm sitting down with that individual 2 or 3 times where we get a good feel what they're doing and the energy and passion they got. Maybe a little misdirected at times, but I don't think an entrepreneur ever stops working, because even when their company is failing, they still see the light at the end of the tunnel, which is what we want, right? So in terms of so we lose a third of our money on all transactions. A third of the time, we work like hell to get our money back. And sometimes that's the hardest thing to do. And then a third of our deals will either make a little bit of money, and a very small minority will make a very large return. So overwhelmingly, we're either losing money or fighting like heck to get our money back. But then, the wins are going to be big wins. And just like all your companies that you're going to start, revenues hides a lot of problems, right? When you got revenues, you can do a lot of stupid things in your company, but the revenues are going to hide it. And it's when you have that shortage of revenues that we see problems, because there's nothing to hide it. There's no place to pay the bills.
I know that, or at least from what I understand, it's common for venture capital firms to kind of put someone in a management position, or kind of put someone they like in a position in the company that they invest in. It seems like that might be something more difficult to do in the Buffalo area. So with that, does that kind of change how Rand is able to invest in Buffalo, and also does it change how you're able to help companies that you work with?
So the question fundamentally is, a lot of VC funds, when they make an investment, they'll stick a person into management, right? Is kind of the basic question you'd ask. We take a little different approach here, kind of regionally, I would say, unless you're a really big fund, is that we will say, we just had this discussion today for a prospective portfolio company. We want somebody representing the investors on the board of directors, right? We don't want to have that person run the company. We just want to have that person on the board of directors. Again, good corporate governance. And that's probably as far as we would take it. I have enough problems running Rand Capital, my own company, that I am not going to step in and run one of these 25 other companies. And so we'll just look for the right person that can help out either at the board level is probably the place that we help out on. But I will tell you that there are times when the management team says, I need this kind of person. And then we reach out to our networks and try to help find that individual. But they would be an employee then, not a representative of the fund. So we do not place people onto the management teams themselves. I don't think I would be a good entrepreneur.
Does that ever make companies, do they feel better about that, or do they feel more? Because I know some companies don't like the fact that they give up control.
Yeah, certainly most of the investors in the upstate region would be minority investors, so they're not going to give up control. On the deal we looked at today, the investors would have one seat out of a 5-member board, so it wouldn't be a control situation. But investors or entrepreneurs are always worried about control, always. And we just had a lengthy discussion with one of our portfolio companies because the person had just dipped below 50% ownership. And I started to see that everything the guy was doing was just all about, preserving his little nut over here, And I had to sit down and say, listen, I know you're at 40% now, and you used to be at 60%, but if we can get this thing another 5 or 10 million in revenue, which increases the enterprise value we can sell it at, you're going to make that up 10 times. It really is. But sometimes an entrepreneur will be so focused on the cap table and their specific ownership, they lose sight of kind of the bigger enterprise value. If you could sell a company, would you rather have a lot of a company that sells for $100,000 or a little bit of a company that sold for a couple $100 million? You need to kind of get that straightened out in your head. And sometimes that's difficult for an entrepreneur. And we try to help them through that.
What's one daily habit that you have, or you've seen in successful people that you would recommend to young entrepreneurs to think will help them be more successful?
Probably a habit that I don't have, but I should have, is over communication. My wife can validate for that, right? Oh, what is a habit that I have or should have that would encourage entrepreneurs to also adopt? Over communication is probably the key. Because what's going to happen, and that's, I think I mentioned that in terms of kind of the weekly communications to investors, is, because at some point things are going to go bad. They will, inevitably. And that gives us more comfort in writing a check because we've had open dialogue and communication. And so probably over communication is something that we do internally when we operate our own company at Rand, over communication to our own board of directors. So I think it's just constant, feeding information out to your investors, your advisors, people in the industry. I think that's the key. You got one more?
Yeah.
One more before Matt buys over to Ulbrich's? Yeah.
Let's say you're an entrepreneur and you've already went through your seed capital, you've done yourself out of pocket, and you realize that you have to grow a little bit further than that. You haven't hit up the Aunt Susie that you mentioned. At what point, though, do you actually think about going to a venture capital idea where it's something you know you can get much bigger, but you could borrow enough to get through the short term? Do you do that when you already have a proof of concept of revenue, or do you, really at what time would you want to sit down with somebody like yourself?
I think it's better for dealing with RAND specific. Z80 would be different, okay? RAND specific is better if you've just maybe got that product launch and just rolling it out to your first customer, whether it be a paying customer or a beta customer, I don't really care. That's a nice first time for me, just because I can validate the market a little bit and I can begin to follow what's happening with that customer application that you're just talking about. So for me, that's a better time. We have invested in several companies that have zero revenues, right? And those are more of a challenge. They really are. But they're kind of the energy and the passion of the entrepreneur kind of sold us on the deal, and we believed in them. We don't do a lot of those deals, but we have a subsection of the portfolio. So I think you need to have your idea kind of vetted. You need to have it kind of in your head, on paper, and have a clear path to market on how much you're going to need in order to get to the next milestones is critical to attract the interest of RAND Capital. Z80 is probably the step before us, where they will help facilitate that kind of idea stage company and help get it to the point where, I don't want to say hand off, but they can get a little more meat on the bones so there's more substance there for RAND to look at.
Cool. Wanted to point out a couple of people before we head over to Ulrich's. We're gonna have a couple more beers over there networking. Peter Cimino, Infotech, the AT&T App Challenge. I forgot to give him a plug in the beginning, so he hacked into the computer and changed the background. But AT&T, in association with a couple of different other organizations in Buffalo, Civic App Challenge. There's more details online, but it's a really awesome opportunity, $18,000 in prize money to develop an app that would benefit Buffalo, benefit the public good. I don't know what he's doing. Pulling up some information. You mentioned we need more people in Ferraris to point at. Redline Rentals, if you can't afford to buy the Ferrari yet, you can rent the Ferrari from Redline. They have a new contest that they're going to announce we could win it for free, so I recommend checking them out as well.
September 27th is an app, the Civic App Symposium, which will give you access to all the places that have open data and help you bring either your idea to people who are building these products or have access to the data, or vice versa, the people who have the access to the data who need the ideas to bring it to fruition to a mobile app. $10,000 to the winner, second place takes $5,000, and third is $3,000. So it's a very large, not as big as 43 North, right, John? But at least we can swing away, and if we do a good job, we have enough people show up and do this and try and create a bunch of apps, next year that 18,000 will be again. So if you didn't win or you weren't ready to present an idea this year, well, by next year you will. So at least you'll know about it. So come out to the symposium at least and meet and greet and use the relationships you're building, just like Anna's told us. So thank you very much.
Thanks, Peter. And with that, I would like to give you one of Dave Sheckeld's hockey puck openers, and this is actually the first, one of one maybe, Startup Grind hockey pucks.
Serial number 1, I like it.
That's a collector's item. I can sign it for you if you'd like.
Yeah, thank you. And the key to the success of Buffalo is all the relationships you're building through Startup Grind, Startup Weekend, the 43 North events, Western New York Venture Association, Upstate Venture Association. Keep talking with people. That's how the relationships are going to be. That's how you're going to get your money. That's how you're going to get your customers. It's all face-to-face communication. That's critical to your success.
So now let's go to Ulrichs and form some relationships over some beers.
Thank
Thanks,
you.
everybody.